Most investors don't get stuck because they lack ambition. They get stuck because the bank eventually runs out of room for them. You might have equity, you might have rental income, you might even have a strong portfolio. But after 2 or 3 properties, residential financing starts treating your growth like a problem. In this video, I want to show you why so many investors hit a ceiling around property number 3. Why that ceiling is usually caused by financing, not desire, and how commercial multifamily changes the conversation from what you personally earn to what the building itself can support. If you're new here, I'm Darren from DK Wealth and Growth. And if you've been following along, you know we focus on disciplined, CMHC-eligible multifamily investing, especially in Alberta markets like Edmonton and Calgary. Stay with me until the end because I'm going to show you the shift that helps investors move from owning a few rentals to building an actual scalable portfolio. Here's what usually happens. An investor buys property number 1, then property number 2, maybe property number 3. At first, everything feels like progress. But then, the lender starts looking at the full picture, more mortgages, more liabilities, more debt showing up personally. Even if the properties are performing, the investor's personal debt ratios start getting tighter, and suddenly the issue is not whether they want to keep growing. The issue is whether the residential lending system will allow them to. Residential underwriting is built around the borrower, your T4 income, your personal debt, your liabilities, your debt service ratios. That works fine when you're buying 1 or 2 properties. But as your portfolio grows, every new rental can start working against your borrowing capacity. That's the ceiling most investors hit, not a mindset ceiling, a financing ceiling, and this is why so many ambitious investors end up saying, I want to buy more, but the bank won't let me. Quick question for you. If you already own rental properties, where do you feel the biggest bottleneck right now? Is it financing, cash flow, deal flow, or confidence in the numbers? Drop it in the comments. I read through them and it helps shape what I break down in future videos. Commercial multifamily changes the conversation. Instead of looking primarily at your personal income, the lender starts paying much closer attention to the property itself. Can the building generate enough income? Can the rent support the debt? Does the deal have the right DSCR? Are the expenses realistic? Is there enough liquidity and net worth behind the project? Your personal financial strength still matters, but the building's income becomes the center of the conversation. That is a completely different game. Let's say an investor is capped out after 3 residential rentals. They have equity, they have experience, but their personal debt ratios are now limiting them. Instead of trying to force another single-family rental through residential underwriting, they look at a CMHC-eligible multiplex in Edmonton or Calgary. Now the analysis changes. The question is no longer just, how much does this investor personally earn? The question becomes, can this building's income support the mortgage? If the rents are realistic, the DSCR is strong, and the structure is sound, that investor may be able to keep scaling through commercial multifamily instead of staying trapped inside residential lending limits. That's the shift most investors never make. So the real issue is not that investors run out of ambition. It's that they keep trying to scale inside a financing system that was never designed for portfolio growth. Residential investing can help you start, but commercial multifamily is often what allows you to keep going. Because once the property's income becomes the focus, your portfolio is no longer limited. The same way, if this kind of disciplined approach to multifamily investing resonates with you, make sure you subscribe to the channel. Each week I break down how serious investors evaluate CMHC-eligible opportunities, financing structures, and real portfolio growth strategies before capital gets committed. And if you want to see whether your current portfolio can transition into multifamily, you'll find a link below where you can book a strategy call. Also, if there's a specific financing question you want me to cover next, drop it in the comments. Thanks for watching, and I'll see you in the next video.